In this video, I am going to go over the chart analysis for the Bitcoin starting from the year 2018 to the latest day till yesterday, which was November the 6th, when Bitcoin price closed around $101,000, 101,290.50 to be exact. So the way we analyze this through creating moving averages around the price chart and calculating the support levels near term, medium term and the long term support levels, and also a resistance level. Besides that, we also do a linear regression of the 200-day moving average for the most recent period, maybe for the last 2 years, and plot a straight line around that to see the trend that is prevalent for the last 2 years, okay, to signify what is the major trend, okay. And before we further proceed, I would like to make some disclaimers. This video is meant for educative purpose only. Some of the conclusions I make from this, or inferences I make from this chart analysis, could be wrong. I need not be 100% right. And everyone should trade on his own risk, okay? But the idea is just to illustrate, what this chart is trying to tell us, okay? You all need to make your own interpretations. Okay, with that out of the way, let me proceed. So let's go back all the way to the year 2018. So beginning of 2018, maybe Bitcoin was around 18,000. It had a big correction, maybe it came down all the way to $13,000 levels, and then it had a slight uptick, and then it was flat for the next 2 years or so, or 1 year or so. And then during the COVID, in the first quarter, market went down, but then the Fed started putting a lot of aggressive measures to prop up the market and the financial system by pumping in a lot of liquidity and taking down the interest rates, short-term interest rates, or the treasury borrowing rates to nearly zero. Okay, that triggered the stock market rally, and that also triggered the Bitcoin rally as well, because there was plenty of risk appetite. So what I have noticed is, whenever there is a lot of risk appetite, Bitcoin gets bought. Okay, that's kind of like the stock market. So it has a correlation to stock market than anything else. Okay, but Bitcoin may have its own mechanics. Okay, I'm not saying it is 100% correlated to stock market. Okay, but definitely taking down interest rates is a positive thing for the Bitcoin, it seems like. Okay, because in this space, the interest rates were taken down and market was going up, etc. And then there was some correction in the stock market, and then during the early phase of 2022, we had the interest rate tightening started, right around April, I believe, maybe, or there was some hawkish Fed talk coming in that they wanted to kind of curtail the money supply and also tighten up the interest rate to battle the inflation. So when those inflation words came up and inflation hitting 7-8%, that was bad for Bitcoin also, because the risk appetite was going away, and the Bitcoin started correcting really badly, and it hit back, to 18,000 levels. Kind of almost gave up all the gains from 60K levels to coming back below 20,000. Okay, so people who held Bitcoin might have had a really heartbreaking situation here, but people who held on still without selling might have enjoyed a huge rally back above all the way to 120K, right? Of course, it has some correction right now. Okay, but you can see this is like a roller coaster basically. Okay, it's not an easy asset to hold, but let's see if there are ways to minimize the whipsaw and also huge drawdowns, by exiting some trades using some moving averages, right? Let's follow a simple 50-day, 200-day moving average. Keep a very simple rule, uh, you know, where whenever the 50-day moves above the 200-day, you just buy. Whenever the 50-day goes below the 200, you sell. Okay, but not every time this is going to work, because whenever the moving averages kind of get flat, the moving average signals are not a good ones to take. But hypothetically, let us assume you have a very dumb program, software that will trigger these buys and sells based on these crossovers. So basically, they say when the 50-day crosses the 200-day to the upside, it's called a golden cross. That means a bullish condition starts to emerge. And when the 50-day moving average goes below the 200-day moving average, it's called a death cross, and a bearish condition starts to emerge. So if you just use this simple guidance, okay, it need not be always 100% right. You can see you could have whipsaws whenever those moving averages get very flat and the price is kind of moving on the sideways. The moving averages are a bad thing to use around those. But for hypothetical purpose, let's assume we are going to trade Bitcoin with that rule. Just use 50 and 200-day. Okay, see whether you will avoid major drawdowns and also capture major upward movements. Okay, so the very first 50 moving above 200 you spot sometime during 2019. So you pick up the Bitcoin kind of low around the $14,000 levels or $15,000 levels, maybe. I don't know. It could be even, it could be much lower maybe. Okay, and then the 250 crossed 200, somewhere here. So you still, it had a positive slope. I'm sure this trade was a successful one. You exit the trade, and then again you had a crossover, but then it fell through. So you would have had a whiplash here. Again, it had a crossover. You go long, but here when you went long, this is around the, somewhere like 11,000, 10,000 level. I'm not sure exactly what it is, but you were still buying very low here, right? And then you ride all the way up. Of course, it went to $60,000 level, but fell, and the 50 crossed the 200 right here, but then the price level you map to somewhere here, right, which is around a $40,000 level. So you would have ridden the market from, you would have rode the market from, in the lower $10,000 level to $40,000 level. It's a great trade. Okay, of course you had some whiplashes earlier, but hopefully not major losses or major gains, also. But this trade would have picked you up nearly a good, near a 3.5 bagger, good, right, in over a short period, within a span of 1 year. Okay, that's about 300% gain. Great, even though you didn't sell at 60,000, because you looked for this 50-day crossing to the 200-day. Okay, and again the Bitcoin starts to go back up from this correction because it found a support right around 35,000 level. You can see that support is around 35,000 level. Okay, that line, and it goes up, and then the 50 days moved above the 200 days, so you are picking it up here somewhere. Okay, in the 45, around the upper 40 levels, right? And then it fell. You can see this time this could have been a loss. Maybe it is, you are selling it near the lower 40s in this crossover. So this was a lossy trade. Okay, maybe few thousands lost here. But what happened here? You saw this really went down back to $18,000 level. So even if you sold at the lower 40, you would have been happy some 1 year later, because when you look back up, hey man, I really escaped that big drawdown. Okay, by following the moving averages. Okay, so this was great. But if you are a trader sort of who swings both sides, who is called quote unquote swing trader, When you see this death cross, you would have gone short from long position. Then you would have made a huge money also. You wrote this and then you write this down short. You wrote this long, you made a 3-bagger, and you write this back to this, so nearly make another 28-30K on this one purchase of one Bitcoin by going short. But a caveat in shorting always, shorting is very risky always, because if some trigger happened after you shorted, after this moving average broke through, technically it sounds like a bearish thing, but if there was an event, a geopolitical event such that, some sovereign nation became very bullish on Bitcoin and it said, very favorable things, they have a lot of reserves in their bank, and they go and they are saying, okay, we are going to buy plenty of Bitcoin or something to that effect. Or maybe the Federal Reserve makes a sudden remark that they are going to pump in a lot of liquidity, into the system. Again, risk appetite would start and Bitcoin will gap up. It will go back up heavily. It will test the previous highs. So if you're remaining short without cutting your losses early enough, you can lose your short. Okay, because a lot of technical traders would have gone short. That will trigger a short squeeze. That means buy at any price. Okay, so depending on amount of shorting, right? So as I said, shorting can have its downsides, but in this case, in retrospect, this short was a great trade. Okay, if you had shorted with this signal, death cross, you shorted Bitcoin, you would have made some 20-30K, 20-25K, depending on where you shorted, right? Because this signal probably resulted here, and then you come here, kind of upper 40s you could have shorted, and then when it goes back up here, this is in the 20,000 level. So maybe $22,000 profit on this short on a single Bitcoin. Okay, assuming there was no event that would have taken back up, right? Of course, nothing happened here. In retrospect, it looks like a great shot. But again, you find, let's say you are a long only trader, you would have exited here, and then you waited for next 1 year or so. Okay, and you are buying in the first quarter of 2023. Actually, even if you had gone short long on the S&P 500 right around this time, you would have made a lot of money as well. But in this case, the Bitcoin had some extra amplification, because look at the levels here. The level was about somewhere around $25,000 level, $20,000 level when it crossed. And maybe the price is okay. Price is fair enough to say it's around 25,000 here, because the crossover is even though here, but actually the price is much above that. So let's say you bought at 25,000 and you waited, and then the 50 crossed the 200. Again here, this was in the $30,000 level. You exit the trade, so you made about 5,000 on this trade, and again 50 crossed over here. Maybe you buy back around 30s, the lower 30s or so, and then there was no this one until here, right, where the 50 crosses the 200 in the $60,000 level. You see again sellers come in. You know why that is happening? It's purely technical. You had a double top here, and then this is testing, this market is testing against this double top. Say they will draw a hypothetical line here, and there was not enough bullish movement right around this period, sufficient energy, I would call it. It has to have a rocketing fuel to go to the next orbit, but that was not happening. It was feeble, so it thrashed around here, whipsawed, fell through the 50, and then tried to fight the 50, stayed around the 50, but it couldn't get enough energy. The 50 started declining, broke through the 200. So you would have exited here in the 60 levels. Okay, wait for things to go back up. But then you saw the 200 was still trending up really good. You can see the linear line also is showing solid slope. Okay, so let's say for your trading rule, since you are following a very dumbified 50-day, 200-day thing. When 50 crossed the 200, you mercilessly sell, right? So you sold around, upper 50s, right? And then you are going to pick back up, but this time around, it is somewhere in the mid 60s you pick up, okay? You have to draw a vertical line to intercept with the price, right? The moving averages are always below the line in a bullish condition. And this time, if you picked up around 65, you rode this bull, but it went through and then it fell through this again. And this time around the price, you will probably sell in the lower 80s or somewhere like 84,000. Then you come back in, buy around 90 because you had again a crossover. And you had a crossover, maybe 95 somewhere, right? 95. And you bought at 95 and you will still hold, okay? So, but although the price, after reaching its peak around 120, 125 level, it fell, and right now, yesterday it closed at 101, okay? But still the moving average has not broken. Although the 50 seems to approach the 200 in an ominous fashion, looks like imminently it will break, okay, through that. But since your rule is only if the 50 breaks, I'm going to take any action, okay? Because if you kept to that, you would be still long, but you only got long back in 92, something like that, right? 95 level, and you would be still in profit, okay? So I hope you get the idea. You buy when it crosses above the 200, 50-day crosses above the 200 and the price above the 50, and you sell when the 50-day crosses below the 200, okay? And you follow this rule always. If you followed that rule, it's not the perfect rule because there can be more things done to even fine-tune this rule, as to ignore crossovers when it is, kind of flat, study the slopes, etc. But in my experience, even if you just generally follow the 20-50 rule, 50-200 rule, in a very simple way, you can look forward to some level of decent exits and decent entries. You will not probably buy at the lowest, you will not sell at the highest, but it will possibly help you from going through big drawdowns like this period, okay? But some of these whipsaws you have no way, around here, okay? And there are some real, risk-taking and more patient traders also are there, okay? They will not sell on just the immediate breach of the 50 to the 200. They see the 200 as kind of like a cushion. See what is happening around the 200. Whenever it hits 200, it is kind of thrashing around there. But then it takes off, okay? So they wait for this to happen. They do not exactly, when the 50 breaks 200, they won't probably exit. They are going to wait for this, okay? This cushioning effect. That's what is happening around. You see that? So same thing probably you can expect here too, okay? But sometimes that can be a dangerous wait, because here it broke through. It never had the cushion. It broke through very clear. It never could come back to 200, and then that suffered a miserable downturn, right? So there is no clear thing, okay? So if you followed a blind 50-200 day move, that is one way you will get a set of returns. But if you used some kind of cushioning around 200, where you sit around, ignoring the crossovers, because you see here the 50 crossed over the 200, and then because of the cushion effect, some thrashing, whipsawing around here for a month or two, or even 6 months, it goes back up instead of exiting the trade, right? So some people are more patient around that, okay? Some people, they use these support lines along with these moving averages, support and resistance lines, okay? Whenever there is a double top, that is considered a resistance, okay? But you can have a resistance line, a double top that can also act as the support line. That's what is happening here. So this is a 3-month support line. This solid, not solid, I mean thick, thick crimson, right? So that one is like a 3-month thing, okay, and this is like a 6-month thing. So you can see clearly, this is the price is actually resting around here, the 106 level, right? 106, whatever, maybe slightly below that. So this is the support level, that is a 3-month level. So that is around 101 to 90. Okay. In fact, it was made yesterday, it looks like, based on this little movement here. And the 6-month is the green one. Okay. So, we can, because it has already had a double bottom here, so we expect the market may try to look for this to, hold around here, this support to hold, unless there is more bearish forces that will push it down to the next level. Okay. But you have to also consider this long-term trend line. You see that right around the long-term trend line, some movement is below that. You can draw another line that is parallel to that. And that line also seems to, if you are drawn a straight line connecting this and this, you could have a straight line. So if it has to break that trend to reach the next level, and if it broke further, it will go test here. There is nothing to say that it will recover from here, go back up, or it will go test this, or it will go down here. Okay. So, but as a trader, if I am asked to infer from this chart, I will tell, of course, with quote unquote, with the risk of being wrong, okay, I will tell my impression on this is, as I said, with the risk of being wrong, the long-term trend over the 2 years looks pretty bullish. There is some level of pullback. It could even be healthy. Okay, no asset goes back up in a straight line. So there are always going to be some waves like that. Okay. So Bitcoin looks bullish to me from a 2-year perspective. There is nothing for me to say, hey, Bitcoin is going to crash. Okay. That's what I would say. From a long-term perspective, Bitcoin is looking bullish to me. Of course, I could be wrong. But if a gun is placed on my head and say, you take a trade on this, then I will bet in the long side, not on the short side. But of course, I could be wrong. Okay, but as I said, this is my impression looking at this chart, because I use always, study these longer term trend lines and see that it is just bouncing around that. That I know interpret as healthy pullback. And you can buy, I wouldn't say anybody to buy or sell. I'm just saying, if it is me, I could, if I'm asked to make a trade on this, I will probably go long than short. Okay. So I hope you understand the scheme of things here. What these price levels are, what these moving averages are, and of course there is also another moving average I plot to see a very long-term moving average. That is like a 200-week moving average. That's like 4 years. To see how the very long-term trend is. Even that one is having a positive slope and trending upwards, but its level is like way below 60,000. So usually what happens is, let's say if something happened in the market, broke through the first support, second support, third support, because once something breaches the support levels, below the trend line is broken also. Let's say the trend line is here below that with the here. If it is broken too, then this trend is broken. That's how you will interpret. Okay. Then it has to find support, maybe here, or maybe it's below that, or if it drops further, it can go test here, okay, because once this support is broken, it has to find a support here or here, right, somewhere here, somewhere in this region mostly. If it lost that, because remember this is the previous resistance point, because this green line is almost coinciding with the level, you know, around here, right? Because if you had actually did a OHLC, you know, if you had done a candle kind of thing, this probably the wicks are touching this, maybe, you know. This is the close price based smooth chart. So if it broke through this, it will try to find support next here, this level, okay. If it breaks that, it has to find support with the very long-term trend line. That's how it works. So Bitcoin more or less follows a lot of you know, technical charting kind of thing, but you can never say for sure with any asset. Anything can happen in the market, depending on who are the players and who bring in money, what are their feel about this particular asset. So they need not obey any of this, and suddenly they can cause a gap up or gap down, okay. But all I'm saying is from a general perspective, how you study a chart, okay. So when I study this chart, I can say, okay, if long-term bullishness is still intact with Bitcoin, okay, mostly I'm sure that the long-term investors are not exiting at this point, just, you know, seeing this correction of over 10% or maybe 20% correction, okay. So it's still this trend line is obeyed, okay. It has some cushioning around here. You can see that this broke through this trend line, but it always went back up, you know. So I would hope, you know, if, as I said, if I am asked to trade this, I will bet in the bullish side, okay. Of course, with the risk of being wrong. I'm just telling what I feel. I could be wrong, okay. With that said, I wish good luck to all the Bitcoin traders, and hopefully you found this video useful. And if you liked what you heard, what you saw, please put a like and also subscribe to my channel. I just started on it, and I want to share a lot of things from my learning, years of my trading and my experience. And I'm also a quant programmer. I programmed this code to generate all these things, so I hope you know, you all find it useful, and subscribe to my channel, okay. Good luck with the trading, and finally I want to repeat the caveat. This is just for educative purpose only. Everyone should trade at their own risk, okay, and I could be wrong in some of my conclusions. Remember that. Thank you and good luck.